Hey everyone, welcome back to the channel. Today we're diving into Robinhood markets, ticker HOOD, and breaking down where this stock stands right now, both fundamentally and technically. If you're watching this stock or thinking about a position, stick around because the chart is sitting at a pretty interesting decision point. So right now, HOOD is trading around $101.70, basically flat on the day, down about 0.11%. Market cap sits at $91.75 billion. This stock has had an absolutely massive run over the past few months, and we're going to look at exactly how that played out on the chart. Let's start with the fundamentals. The PE ratio is sitting at 47.73. That's high. The market is pricing in serious growth expectations here. This isn't a value play. EPS trailing 12 months is $2.12, net income $1.88 billion, and revenue $4.50 billion for the fiscal year. Now here's something worth flagging. Beta is 3.80. That is extremely high. This stock moves almost 4 times more violently than the broader market. So if you're in this name, you need to be ready for big swings in both directions. One more thing on volume, recent volume is 7.28 million shares versus a 30-day average of 31.7 million. That's a noticeable drop-off, meaning short-term trading interest has cooled down a bit after the run-up. On the news side, ARK Invest just added about 2,943 shares of HOOD, bringing their stake to roughly $299,685. Not a massive position size-wise, but it's a positive institutional signal worth noting. Now let's talk Wall Street. The average one-year price target from 24 analysts is $106.29. That's only about 4.5% upside from current levels. But here's the wild part. The range is enormous. High estimate is $155, low estimate is $65. That's a 52% upside case versus a 36% downside case. When the spread is this wide, it tells you analysts are deeply divided on this name. High uncertainty, high disagreement. Overall analyst rating leans toward buy, sitting between neutral and strong buy on the rating gauge. Not a unanimous strong buy, but a clear lean positive. All right, now the fun part, let's break down the chart using smart money concepts. Going back to around April, HOOD formed a strong low near $70. From there, we got a change of character, a CHoCH, which kicked off the shift from bearish to bullish structure. Moving into June, price broke through resistance and confirmed a break of structure, or BOS, which validated the uptrend and accelerated momentum hard. From there, HOOD rallied aggressively, pushing from the $80s all the way up toward $115. At the top of that move, we got a weak high around the $115 level. And weak here matters, because weak highs often get revisited or swept rather than holding as strong resistance. Price then rejected hard from there and pulled back sharply. Right now, price is sitting inside what we'd call the equilibrium zone, roughly between the previous day high and previous day low, somewhere in the $95 to $102 range. This is basically a 50% retracement zone of the recent up move, and it's a key decision area. Zooming out on the broader range, above us, between roughly $118 and $140, we've got a clearly marked premium zone. That's a supply/resistance area where sellers have historically stepped in. Below, between $70 and $80, we've got the discount zone, the demand/support area tied to that original strong low. So what's the game plan here? Bulls want to see price hold above the equilibrium zone and reclaim the previous day high. That would confirm continuation toward retesting that weak high near $115. Bears, on the other hand, are watching for a breakdown of the previous day low, which could send price searching for liquidity lower, possibly back toward that $80 to $90 zone before any next leg up. Given the high beta and the wide analyst target spread, this isn't a set it and forget it stock. Confirmation matters a lot more here than guessing direction. That's the full breakdown on HOOD. Strong fundamentals story, high valuation, huge volatility, and a chart that's sitting right at a key equilibrium decision point. Let me know in the comments where you think this one is headed next. If this kind of breakdown is useful, smash that like button, subscribe for more stock analysis, and I'll catch you in the next video.